Treasury yields don't usually shoot up after a cooling inflation report. On the contrary, this time it was different. Why? Hello, member super savers and bond course fans. I hope you're healthy and well. Here are the 3 topics that we'll be covering in this week's Treasury update video. Why did Treasury yields jump on Friday despite a cooling inflation report? How high did Treasury yields end this past week? Plus, what's on the upcoming auction schedule? And for those of you who've been waiting for a July 4th bond course sale, I've included the coupon code in the video description below for you. As usual, here's our front of video disclaimer. For a detailed disclaimer, please refer to the end of this video. Let's dive in now, folks. Morning exercises, and I mean physical morning exercises, not math morning exercises. Anyway, morning exercises kick off a bit later in the Lammer household when school's out. And this past Friday, around morning exercise time, 8:30 a.m., the Fed's preferred inflation gauge, the Personal Consumption Expenditures Price Index, the PCE, was released by the Bureau of Economic Analysis. The PCE showed an increase of 2.6% year over year for May 2024. That's slightly lower than the increase of 2.7% year over year for April 2024. Core PCE, which excludes more volatile food and energy prices, also showed an increase of 2.6% year over year for May 2024, compared to an increase of 2.8% year over year for the previous month. This 2.6% represents the lowest increase in core PCE since 2021. Both PCE and core PCE came in as the market expected. So, what usually happens to bond yields when inflation shows signs of cooling and comes in according to market expectations? Well, usually bond yields go down because cooling inflation generally helps build a case for the Fed lowering interest rates. So as I started to think about this video, I was firmly expecting Treasury yields to go lower. And indeed, bond yields did go down initially on Friday after the PCE report was released at 8:30 a.m. But then Treasury yields started moving higher not long after 10 a.m. And by the end of the day, practically every maturity across the Treasury spectrum was up, as you can see here. Now, I was surprised, and it seemed that no one could at first really pinpoint exactly why Treasuries were selling off. According to MarketWatch, the round of selling on Friday may have been driven by traders moving to close out month and quarter end positions. Remember, lots of sellers generally means lower bond prices and higher yields. And perhaps this was the reason, at least partially, but such a big jump in Treasury yields on a single day, and in particular on the medium and longer end, in the backdrop of what should have been a positive inflation report. So this spike in yields doesn't make sense unless we consider the presidential debate from the previous evening, which was in any case what everyone was talking about on Friday. Now, while elections generally may not have a significant impact if you're a long-term investor, on a day-to-day or short-term basis, markets do react. In our mind, this big jump in Treasury yields on Friday was one of those short-term market reactions, the opposite of flight to safety. We are a financial channel at heart, so let's just leave this at the presidential debate probably flagged some of the political risk involved in holding Treasuries, which are supposed to be the safest, most liquid fixed income investment in the world. Markets generally love stability and predictability and hate uncertainty and all kinds of risks, including political risk. But it seems to me that it might have been exactly the political risks showcased in the presidential debate that may have caused some jitters amongst Treasury investors, leading to Friday's sell-off, even though maybe with a bit of a delay until the markets had really digested what they had seen the previous night. But I think many of us needed a bit of time to let it settle after the debate. By the way, the S&P 500 also closed lower on Friday. For those of you in our Bond Beginners course, please refer back to Module 2, The Risks of Bond Investing. Political risk in this context would fall into this risk category here for domestic investors in U.S. Treasury securities, something we would normally not be exposed to as Americans investing in debt issued by our government. But after the presidential debate, some domestic Treasury investors may be questioning this. For foreign investors in U.S. Treasury securities, political risk in the United States could expose them to both currency and country risk. And for those of you who follow international markets, bond yields in France, which is facing a parliamentary election next week, where it seems that the extreme ends of the political spectrum may come out as the big winners. So French bond yields have also been spiking recently due to political risk. But back to Treasuries. The point is, as volatile as bond prices have been, the closer we get to election day and the more political uncertainty there might be in our country, the more likely it is that we will see even more roller coaster rides in the bond market, which is a great segue into the next section of this video. As we so often do at the end of a week, let's compare Treasury yields from this past Friday versus the previous week. Here we have all the maturities that the Treasury issues at auction. Here's where yields stood this past Friday, and here's where yields stood at the end of the previous week. The results were a bit mixed on the very short end, with the 1 month and 2 month maturities up, the 3 month, 6 month, and 1 year maturities down just slightly, and the 4 month maturity unchanged. But at the longer end, everything 2 years and above ended up for the week, as you can see here, presumably also because of the political risks that we just discussed. Relative to the beginning of 2024, bond yields are nearly all still up, as you can see from this table, comparing Treasury yields from this past Friday versus January 2nd. This row shows the increase or decrease in rates since the beginning of this year to the time of this taping. Increases in rates are shown in black, and decreases in rates are shown in red. The 1 month and 2 month maturities are still down, but they have come back up a fair bit since last week. Overall, though, rates remain higher across all the other maturities, especially on the medium and longer end of the maturity spectrum. You can find more details on these rates for any day of the week that the bond market is open on the Treasury's Resource Center website here. All sources are linked below in the first pinned comment. So that was a recap of bond yields and auction results from last week. Now, let's take a look at the upcoming week's auctions. Here we are at Treasury Direct's upcoming auctions page. If we scroll down, we can see that all the weekly T-bill and CMB auctions are happening as usual. Other than that, it's pretty quiet on the auction front for medium and longer dated Treasuries. So, who in our community is buying this week? Drop us a comment below and let everyone know. And if you're newer to the world of Treasuries, or if you're ready to really learn the nitty-gritty about bond investing and building a bond portfolio, do note that our July 4th sale is up and running. The coupon code SUMMER 2024 is valid through Sunday, July 7th, 2024 at midnight Eastern Time, 9 p.m. Pacific Time. Use it to get 10% off Bond Beginners, Bond Masters, as well as our Bond Course bundle. This is the most popular choice amongst our Diamond NestEgg bond fans at the moment. And yes, that's 10% off on top of this $80 savings when you buy both courses together. Plus, you'll be joining just in time for our Bond Beginners live course session in July. Take advantage of bond yields while they are attractive and check out the links below this video for more details on our bond courses. And don't forget, your purchase is risk-free with our 7-day refund policy. All right, members, super savers, and bond course fans, I hope you enjoyed this video and learned something new. Good luck to everyone who's planning on buying at the upcoming week's auctions. And see you again very soon with more brand new wealth building content for your financial journey.